All right. We're recording. End of May, if you're watching this in the future at some point, watching it live, we just went over some guest hosts, some guys coming on, what you'd like to hear about. But for today's session, and again, always think about being in a conference room once a week, Tuesdays at 11, and getting around the guys. Use the team room to do this daily, but use it to be in touch with me weekly. And that is, we get together. What are we going to talk about? What's been going on? What could happen? Micro, macro stuff specific to certain topics, bringing in guests, answering questions, and everything in between. Now, 2 weeks ago, Brent Nord came in. Watch that event if you didn't already, 2 coaching sessions ago. He came in, and him and Brad Jelnick, who also have guest hosted, talk about at times this stupid news concept, something that could rally us and then it's really irrelevant, so we go down. Or it could break us and it's irrelevant, so then we go back up. It's news that comes in that knee jerks us around, but it would have never went up or down had that news not come out. In other words, they call it stupid news. A really great phrase to put on this scenario. I'm trying to go off a little bit about Brent's event 2 weeks ago. Last week, I talked about how the market is testing an open position, not just yours if you're in a position, but it's constantly testing open positions. Go back and watch that event last week. The point of that, I want to make sure I'm recording here. Yeah. The point of last week's session was 99% of the time we don't have an open position, but someone does, right? A lot of people do. And so the market's constantly shaking out and testing the weakness and the strength of other people's positions. And then when we get into the fray, it's going to test the strength and weakness of our convictions. So that's important to understand why a test happens so that you're not a victim or you don't feel like it's personal. For this week, we often get transitions could also be overlapped with stupid news, and we got that today. One of the more popular sessions we did in these weekly coaching events have been B2B, is the title of it. The B stands for bullish to bearish or bearish to bullish. It's simply a unique way to find transitional moments or put a title on what could be transitional moments in a market. All right? Let me cover that with a whiteboard. Let me bring this whiteboard in and let me know if you guys are able to see this. You guys able to see this whiteboard? All right. No, not yet, but you will be now. Got it. All right. So to review a B2B moment, it's just a probability thing. If it's easy to assess that the market is strong because price is rallying and any fifth grader could say it's bullish, great. Where is there a moment where maybe before it goes all the way back down in here, somewhere above, maybe somewhere in this box, we could say, hey, that's a transitional moment. The bulls who were in control are not anymore. Bullish to bearish in this example, B to B, right? Transitional moment. It's too late to say it's transitional and bearish down here. Price is already rubber band all the way back there. And not necessarily too late in the volatile day. There could be some value to it, but it certainly would be more valuable to lay a probability that it went bullish to bearish up in this box, right? What could be some patterns? What could be something that's easily recognized higher than lower when you're going from bullish to bearish? All right. That's important. And that's kind of a circle of skill that I like to call things. And when you got a couple circles of skill and you're able to overlap them, so then they look like this, where they overlap is your skill over the rest of the world, right? Is your skill as a trader over the many that you're competing against. When you're overlapping, obviously skill number 2 and skill number 1 have to make sense. It'd be like a tape measure and a saw. If it's a carpenter, it can't be, clouds and sunshine if you're trying to cut wood. So they have to make sense, the two circle skills. But when you overlap them, they they make even more sense. And that's kind of the whole premise of this particular session. When you take a transitional moment of B2B that you would have in and of itself in isolation, and then you're able to take the concept of what gets it rich or cheap in the stupid news concept of Brent and Brad, SN is what I abbreviated as. And when you're overlapping these two, how could it provide a when moment to actually execute? So you're creating, why are you bullish to bearish? And then when could you execute that opinion? Sometimes only having the opinion is useless. Only having the why moment to execute is useless if your opinion's dead wrong. It's important. I shouldn't say useless. Good locations are always important, but they're not going to lead to consistency if your opinion's dead wrong all the time. Can you take a probability of a transitional moment and combine it with some semblance of order flow, or in this case, some news that got the market out of whack, to get on the right team, to get on the team, period? How do you know? And I'll leave this question open for guys in here now. And I'm going to leave it in here. There's no wrong answer. But how do you know? What's one example of knowing that your location, your opinion, and your trade is a really good one? Don't tell me after you got out of it. What's the first example that you might have them? I got them, so to speak, right after you put it on. What's the first example of that? Perfect. So everyone answering correctly. Moves your way ASAP, immediately goes your way, goes. Price is going to be the first thing to tell you how good you are, how bad you are, right? Price. If you leave the dealership in that brand new E-Class Mercedes, and as soon as you left, friend calls you up and says he just bought one, same exact car, same exact year, brand new, for $2,000 less. You thought you had a good price. You immediately were told no. Why? By price. So you want price, the trade, the money to go your way ASAP. Does it always do that? Of course not. Should it always do that? Of course not. But when it does, is the definition of good location. The rest, you should be able to manage from the standpoint of all the other skill set that you have, of not being too greedy, knowing when to be greedy, knowing when to be stubborn, knowing when to be impatient, knowing a rotational market, knowing how to scale out, knowing that you can't hit home runs in certain days, on certain days, and so on and so forth. But all of that is easier to do when you're playing it from the green side, isn't it? Making decisions are always easier when you got money in the trade, period. End of story. All right, so we're taking B2B or transitional moments, in this case, when we go from bullish to bearish, and trying to combine that transitional moment with something that could get you on the team. In this case, the news that came out at 9 o'clock Central. And we're going to go over that because I think it's not just a little important. I covered it a little bit in the room today, but it's really important to document this so you can go back and watch this video again in the future. Now, let me share my chart. So bear with me a second. Let's get rid of this guy. Do you guys see my chart you normally see in the trading room? Give me a quick yes or a quick why. You see this chart? Good. So now today in the market, a B2B moment. We had one late last week, and you'll have some from time to time. It doesn't have to be on highs or lows of the day. It doesn't have to be perfect, right? There's very few things that are perfect. So don't try to be perfect. Just, think of that doesn't make as much sense. The fact that they ran up to make higher highs in the S&P, so the S&P looked like this, all right, when the NASDAQ looked like this. That's all when you compare them to each other. Just identifying one stronger, one might be weaker, and the market might be creating a little bit of a transitional moment to roll over. Now, it looks great now that that was the case, but at the time, we don't know that. Up here, we don't know that. They're just potential clues that the market might be transitioning. Because remember, we opened way down here this morning. And if you're watching this on recording, it's May 28th. Go back and look at it. We opened up and rallied a good 9 points as an opening drive, putting the Bulls in control, making them feel really good. So it wasn't easy to make them feel like crap. But once they got them feeling like, uh-oh, you usually get most of them late to the party, so you had an extended reversal. Point being is, number one, you had a market divergence. You didn't have the NASDAQ as strong as the ES in a particular sequence. That sequence took place right in here. All right. That's number one. Number two, you had at 9 o'clock a number coming out. Well, first of all, you have to know that the number is generally a number that's somewhat important. I used to call them top 10 numbers because they can't have influence on market direction one way or the other. And today's number was consumer confidence. You have to know that consumer confidence, where it's supposed to come out. And it's supposed to come out at 130.0. All right. You have to know what kind of is a big miss. And before you know what the miss is, which was 134.1, you have to know what time, what's the number where it's supposed to come out, and relatively what importance it is to price. So like I said, generally it's a top 10 number, a market influencer in the past. You're not going to make money to buy it as soon as it comes out at 134, but you can start to get yourself in a position to say, could this have just got the market expensive? So we go back to 9 o'clock here in the NASDAQ because you see it a little clearer in the NQ. Could the market get expensive? Well, I went back too far. Hold on a second. Bear with me. All right, right in here. Could the market at 9 o'clock, which is right here, 9 o'clock. So you run it up. Here's where we were at 9 o'clock Central, NASDAQ. What kind of context before any of this, so we don't know any of this is going to happen? What kind of context do we have? Number one, we know that the market opened up just like the ES and rallied quite a bit and got strong. All right. Number two, it showed a little weakness right there, could not make a higher high. The other chart in the ES looked like this. They were making double top highs, ready to make higher highs. The ES was 8 points below it. Sure, it could go up and make higher highs and catch up. That happens. But all we know is that it's not. It's 8 points below its high about 15 minutes in. It was bullish, maybe showing some W, some weakness. All right. We don't know for sure. Then I do know that this was an awfully tough chop, and we said this in the room. The middle of it was important. If you were trying to play it on the upside above the middle and on the downside below the middle, and you did it too, you were probably getting chopped up. It looked bullish, it looked bearish, it looked bullish, it looked bearish. So it was tough before it finally let out through the bottom, right? Right in here. If you were leaning to play this to the downside because of the divergence you've seen with a lower high between those two circles, because the ES was showing you something different, then you probably did a little bit better playing this thing to the downside. Why? Because it eventually went down, not up, didn't break through the top, broke through the bottom. Now, why did it come back here? Why did it come back? You don't have to trade news, but you better understand that it was news. And I can't tell you how many people, not here, but in the world, that don't know why there was a brief pop in the NASDAQ or the indexes at 9 Central. Look, they'll make it up if you ask them. If they don't know, most people will say, oh, must have been some top of the hour buying. Most people don't like to say, I don't know, as an answer. Most people are know-it-alls. Some people have a problem with it. But most people want to know the answer to a question. Adults, kids, doesn't matter. We hate to say, I don't know. We hate that. So they'll make something up. We knew why it popped like this. And in real time, I said, this could be a case where it's going to go to the center of this consolidation. It's not arbitrary while the center would work as good resistance. And this pop in here just got the NASDAQ expensive. That's the whole premise of stupid news that Brent and Brad talk about. It gets the market out of whack for a small, short period of time. It gets it expensive or cheap. Those are two important words to understand, that I've been using those words for years in trying to understand when a market's overbought or oversold, cheap or expensive. It's not going to go down easy if it's not expensive. It's not going to go up easy unless it's cheap. So the only reason the NASDAQ went from 52 to 62, one reason, consumer confidence came in higher than expectations and even a little higher than the range of expectations. So there was a 130 expected print, and it was like a 128 to 132 range, and it came in 134. None of this is going to matter unless you were able to build context into this entire story that chapter by chapter you lay out and understand and anticipate for the next one. But if you guys don't understand this one, how are we going to be able to capitalize on the next one? A big part of trading is always the next one, but there has to be that progression in order to capitalize on the next one and to know where you're wrong if the next one doesn't come to fruition like this one did, and the downside was the right side for a while in this particular market. B2B transition, stupid news that got it out of line and got you on the team. There's enough tools that you have through this course to maybe have gotten you short if you've lined those two things up. So anybody that asks me, well, what could get me in? If you got these things lined up, you got to know what else could get you in. Hell, just play price if you have nothing else. And so someone's bringing up the why it went up and just the simplicity of it. And I'll walk you through this comment because it's a good one. The simplicity of why it goes from this X to this X is because you get a lot of people buying and trying to buy it because of consumer confidence. But the realization is, how important is this stupid number? And it just gets it out of whack. And so the people that did, in fact, either puke a short from this X to this X or get themselves long finally from this X to this X helped push it where it wanted to go anyways. You created more longs and less shorts on that pop. And anytime you create more longs and less shorts, if that's indeed true, we're going down. All I need to know, if I had a speedometer that told me for sure when more longs and less shorts were created, I could trade with my toes if it was an accurate read on more longs, less shorts. Because then you'd be able to say, well, what's too long, what's too short? And more longs, less short means what? More sellers, less buyers. This is the equation that matters. ML equals MS and LS equals LB. So when you get this, you get this. And when you get this, I don't care what the price is of cars. I could say some other things, but might be inappropriate. The price of that particular product or service is going to go down. All right, so that's B2B moment with the stupid news, and I'm going off of what Brent. He's going to come in, like I said, in a couple weeks to talk a little bit. If you haven't watched the session he's done, the sessions that Brad's done, the podcasts that they've done, you got to listen or watch them because they're good, and they'll set up in a couple weeks when he comes in to talk about some more specifics. Now, let's take this chart and talk about the reversal, because the reversal happened and it was another B2B moment. And the reversal was been much stronger in the ES or in the NASDAQ now than the ES. And by the way, when we talk about correlations, intermarket divergences, take a look at Apple and the NASDAQ if you're slowly or exclusively a NASDAQ trader. Take a look at the highest weighted stock within the index you're trading to glean some opinion as to what the index is doing that you're trading. That's not going to hurt you at all. Take a look at what's moving or could influence the index you're trading the most. And it ain't the TPOs or value area high or Fibonacci. What's going to influence the NASDAQ the most probably is the one that represents most of it, correct? Let's not look past what's simple. Now, down here, we said just before the room closed, I mentioned there was a transitional moment. Where was it? Right here. No, that's not it. Although that's another one, by the way. Transitional moment back up. A lot of times people with transitional moments, they become, because this is what people want. They want their opinion to be, they want their opinion to be correct forever. So therefore, they're going to have an opinion when they think it's got the best chance, if they're bullish, to go up a lot, or go down a lot. How about just temporary? Start there. How about just, hey, I'm bullish until there's a transition where I'm no longer bullish. Now you're more apt to be open-minded. What's the price? What's the market telling you? All right. And so when we're trading in here, we talked about there was this jump. Now, this jump in and of itself didn't get me bullish. It was the fact that it already had cleared and tested a pretty important and clear target, I think, for the market. And I think when you could look at what are clean targets and you see them achieve that target and then have a big jump out of the hole, you could then assess that, yeah, indeed, this might be a B2B moment. It doesn't have to be a B2B moment to then make new highs. If that's what you're waiting for, you're going to be wrong a lot. It just has to work temporarily, either to get you on the right side or keep you off the wrong side. So when you walk through this, it's no coincidence that where the transition happened becomes subsequent support in this case. Go back and watch the B2B video I did a couple years ago. It's one of the most popular watched videos in the in all the sessions. See how bullish it is for how long? From 25 even all the way to 32, a 7-point rally. That's not bad before it then has a transition to be bearish. And where would that happen? Not yet, not yet, not yet, not yet. Right there. Why there? Because these three greens and this green get breached. Somewhere up on here, it gets bearish. And I think we talked about that before the room closed. So when you're putting your bearish to bullish transition down, and you didn't have one here, and you didn't have run through an exercise to predict one there, then you're not going to get comfortable that you're understanding transition or how good you are at predicting them, and then how are you going to trade them. B2B moments. Why 25? There was some inventory down there. You see it. This is easier for me to say that this is a transition up because I know we've rallied a little bit, but if you're consistent as to why that might be a transition, then it's not, hindsight's 2020. They get through these reds on the retest of 25, it's bullish again. Boom, bullish again. And then the market walks up. So it's an exercise early in course number 4 on this edge, in this edge program. You guys have been through most of it anyways, so it's easier to go back and look at some videos. The learning is more effortless because you guys are more interested in this market. I think once you've been through a lot of the education in here, and it's just, we talked briefly about this in the trading room, it's easier to understand stuff if there's interest in it. Ask yourself the questions. When could I have predicted that the lows might be in, the highs might be in, the transitions might have happened, and how can I take that information and be able to recognize it in real time and be right most of the time? Not in the trade, but in the opinion. So like I said, we're trying to get more into, we cover a lot in this program about execution and order flow and delta divergences and everything on a micro level. And now we're working on opinion. Get the right side. And then you try to bring those two together. The right opinion with the right location is where the power for consistency stays and isn't just flash in the pan stuff. I had a question for guys about, two things that I think it has nothing to do because there isn't a lot of money to be made for it. So you guys could strip that away if you're apprehensive as to why I'm talking about this so much. But I'm disappointed that there's more people using the verbal journal in this community and using the Edge Zone audio. There should be more. They're not expensive and they're going to help you. How much? A lot more than if you don't have them. How about that? This whole verbal journal could be a great way to document how you exercise these transitional moments. And you don't have to exercise like you might an hour a day to keep yourself in shape. 5 minutes a day, 5 minutes a week. Go through and see how many transitional moments you could call as an exercise and then document it. But if you're not documenting it, it just becomes a bunch of spilt out Legos. You got to build them a little bit. You don't have to build this perfect replica of the Sears Tower or a dinosaur like you see so many people build professional Lego. Just build a little something with them so they're not like a bucket spilt out over the floor. Organize those thoughts and opinions so you can clean up your randomness. Sierra and Ninja are the only two platforms that this verbal journal works on. That's one of the reasons why more people aren't on it. If you have one of those two platforms, get it. Audio, the Edge Zone audio, it's not going to hurt you. It can only help you. So get it and put yourself in a position to have better tools to go over exercises so that you could read in real time. Because it's always going to remain the pain point of everyone throughout your career. It's just that you have better tools to address it than those who never get good at it. So to summarize today, transitional moments along with something that could have been a no-brainer to get you on the team. In this case, stupid news. 2 weeks, Brent's going to come back, hopefully with some more examples of where this happened in the futures market. Him and Brett talked about in stocks where you have to be a little bit more patient and let days develop. But the whole bottom line is, when could we create an opinion that's not random when it works, so it doesn't feel like a good guess? If a carpenter building a deck feels like his cuts and his measurements are good guesses, I don't want to be walking on that deck when it's finished. So at some point, there has to be some probabilities. You knew this was going to happen, and you weren't surprised when it happened. You didn't feel lucky. Skill. It's when hope turns to skill instead of skill turning into hope. Any questions? Don't forget, email Anthony at edgetradinggroup.com is the address. If you got some opinions of what you'd like to see or hear from Anthony Credelli in a couple weeks, or it could be a couple months. I haven't scheduled it with him, but some point over the summer. It doesn't yet. Good question, Alan. The Edge Zone audio doesn't work on Ninja Trader yet. The verbal journal does. The Edge Zone audio only on Sierra for right now. And if you're asking me, what are you talking about, Anthony, this Edge Zone audio? Are you crazy? What are you saying? I don't know anything about it. Go to the Edge Trading Group and go to software. Watch the video on it. That's for Sierra. And trust me when I tell you, there's not that much money in development. Selling these things isn't to make a ton. It's just tools around for edge guys to have that are better than indicators you've paid thousands of dollars for probably in the past. Anything else? Just because we're entering June doesn't mean it's going to be summer markets. I didn't go over this at the top of today's session, but I will here at the bottom of it. Same thing remains with China and U.S. Different outliers right now. There's no deal. There's a lot of daylight between the two. If there starts to be any rhetoric that they're closer, that they meet, that they have something, upside's the right side in the indexes. Right now, it's priced in that there's daylight between the two sides. We talked briefly about this in the trading room, but there's a lot of like uncertainty. You could have 10 different quote experts talk about trade wars. There hasn't been one in me being in this business on the floor and in front of a screen for over 20 years. So it's difficult to really navigate what this means and the uncertainty of it, how much it'll affect the global economies, the domestic economy, when's it over with, who it affects the most, and so on. We talk a lot in the beginning of the trading room about the names stock-wise that have most exposure to China, and Mark does a good job going over those, especially in this environment where the trade talks carry the most weight. Always set yourself up for the outlier, the comment that could make you a lot of money because you were in front of your screens and it was really bullish and you bought a whole bunch of them because Xi said he's coming to Mar-a-Lago and it's going to put some suntan lotion on Trump's back. He's so excited about this deal. If he says that, I think that's pretty bullish. He's pretty confident if he's doing that. But there's comments you're gonna be able to put yourself in a position to do decent with. You got to anticipate them first. If you didn't anticipate consumer confidence and how a bullish number that really isn't that market didn't care about it, what does it matter, right? You could see how we're not rallying that much in the ES. Right now, the ES is showing weakness versus the NASDAQ. And give you an example. Look at the NASDAQ take out these swing highs here. Let me draw them. So the NASDAQ takes out all of these decent swing highs, right? And they take them out on these rallies in there. Not too impressive, but they get through 50 even. These are all swing highs after 10 o'clock Central. So then we look at swing highs after 10 o'clock Central, and we haven't gotten through them through them. The highest swing high after in the last hour was up around 34 even. We can't get through it, even though the NASDAQ got through theirs. So you kind of scratch your head, and if you are bullish, you keep a short leash on it and expect the chop. Can't go up when it should. They had a nice rally in here since we've done this session, and they really can't break above 34, even though NASDAQ is broke above 50. And we're entering midday and everything else. As I leave you, always remember these circles, whatever your skills are, whatever these circles represent for you, find the overlap. They don't have to be the exact ones I talk about, but identify what skill you have to predict price. You guys aren't here day one. Everybody in here has a lot of market experience. What two skills do you have, and how could you bring them together to find and trade the overlap?